The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
We're going to kick off another new year of growth and income stock picks for you with the editor of Zacks Income Investor, Brian Hamilton, who's here with me. Got a couple of interesting ones to kick off the new year. First, Las Vegas Sands. They recently beat earnings both on the top and bottom line.
Yes, that was for the third consecutive quarter, actually. Las Vegas Sands is a developer and operator of luxury resorts and casinos worldwide. They have resorts in Las Vegas, Pennsylvania, Macau, and Singapore. Now, these aren't your typical mom and pop Golden Nugget. You get the dollar beer and a slot machine. You know, these are destination resorts. These are high-end. They offer fine dining, entertainment, convention halls, high-end retail, and of course, high-end gaming. Now, management has been recently focused on three major areas as of late. They introduced a $1.1 billion capital plan. They're looking to strengthen their VIP accounts, and they're doing remodeling and refurbishing of several of their properties. Now, the $1.1 billion capital plan is going to be mostly focused in Macau, where they're taking one of their older casinos and they're transferring it to what they're going to call the Londoner Macau. It's supposed to give you the feel and the ambience of actually being in London. They're actually also adding hundreds of new suites in their Macau and Singapore properties. They're renovating their malls and their retail to attract more high-end retail shoppers. And they've also been successful at strengthening their VIP segment, which has been growing, which is also helping in their margins. As we know, the VIPs tend to spend a lot more money, and so that's helping them get more revenues into the company.
Yeah, they don't walk in with a bag of quarters or nickels like
no, it's usually a briefcase full of money. Yes.
Right.
Now, the company also has, has a really strong stock repurchase program. They've been repurchasing about $75 million worth of shares each quarter for the since 2013. They started a $2 billion stock repurchase program. They also have a massive 4.2% annual dividend yield. Now, there's also been two news notes as of late that are really going to help the company growing going forward. First, Macau Gaming reported that casino revenues were up 19%. Now, this was up the first time it was in the black since 2014. I'm going to show you how important this is when I show the price and consensus graph as well.
Okay.
Also is the new tax law, which is supposedly reported to give people about $2,000 more money. Now, we all know people tend not to save this money. They're going to spend it on travel, leisure, and entertainment. So it should help also the domestic side with Pennsylvania and the Las Vegas properties. Now, I alluded to the price and consensus. I want to show you the price and consensus graph here. Now, as you can see, the stock was up and a little above $85 in 2014, the last time Macau showed positive receipts. Now, when Macau receipts started to fall, well, Las Vegas Sands has a lot more exposure into the, what you call it, in the Asian market. Now, we have started seeing a nice little bump up here as the Macau receipts have gone up. Now, Macau gaming revenues are supposed to continue to go up in double digits through 2018. So this has helped the analyst estimates, which have moved up for the next 2 quarters and the next 2 years, as I can show you here. And as you can see here, the estimates have increased for the next 2 quarters and the next 2 years. So what we have is a company that is spending money on refurbishing and remodeling for the future. They're looking to invest more in the Macau and Singapore, which are their high growth areas, but they're also returning money to shareholders with a nice stock repurchase program and a huge 4.2% annual dividend yield, which is pretty much unheard of in the gaming industry.
Okay, all good news there. And General Motors is in your sights.
Yes, they are.
Recently reported some good sales numbers.
Yeah, the automakers recently reported this week December and 2017 annual sales, and General Motors beat all expectations. The numbers were so good, and there's so many of them, I had to really put it on a PowerPoint slide to help explain it a little better here.
Okay.
As you can see, they delivered over 3 million vehicles in the U.S. in 2017. Now, they also had record sales for their trucks, their crossovers, and their electric vehicles. Now, this is important because management has been really shifting away from passenger cars into these 3 segments because consumer preference is going towards these 3 segments. So they've been very successful on here. Now, another major importance that came out of the report was their average transaction prices was about $3,800 more than the industry average. So they're selling more vehicles and they're selling them at a higher price. Now, this just isn't in the U.S. Canada, total vehicle sales were up over 9.2% year over year in December as well. Now, specifically, in the segments that they're really concentrating on. Their crossover segment sales were up over 17% year over year. Now, they also improved their overall market share in the retail segment by 1.6% to 13.1%. Now, this is the fastest growing of all automakers. Now, their pickup trucks, for the 4th consecutive year, they sold the most pickup trucks in the U.S. as well, just under 950,000 units sold. Now, the other area of the 3 areas they're concentrating on, the pickup, the crossover, and electric segment. The electric segment, the management has also been really focused, and now this is more of a future outlook for the company. They had reported late summer that they're going to come out with a new family of vehicles, about 20 new electric vehicles coming on the market by 2023. Now, this is really important for the China segment because the Chinese government imposed new emission laws that are going to take effect in 2019. Now, the laws are complex, but basically saying that, well, if you don't meet these particular criteria, you can go buy some credits from us, and we can offset this. Well, during their auto sales announcement, the management for General Motors said, we're actually going to make that goal in 2019, and so we don't have to buy these credits. And so that's going to be extra revenue for the company. Now, the company also, outside of looking forward and transforming their company from more of a passenger to the pickup, crossover, and electric vehicles, is they're going to pay us a 3.6% annual dividend as well. And they have a strong stock repurchase program. They've been buying shares since 2015. So the company's looking forward and returning money to shareholders as well.
Yeah, all good news for them, too.
Oh, yes.
Do you own either of these?
Personally, no, but I hold them both in the income investor portfolio.
All right, thanks for that. Don't forget, as always, more stock information on our website, Zacks.com. All you need to do to look at it is get over to the homepage. With Brian, I'm Terry Ruffalo.